from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right. You know, sometimes I get like depressed that the state of the art of speech recognition is not more advanced than this. Because, I mean, come on, it's like this has not really changed very much in the last few years. I complained about this before, probably a few years ago, but I'm not happy with I'm not happy with what, you know, you just think it would get better and more natural by now. I don't understand. It's like, what are they doing in artificial intelligence if they can't do a simple thing like read a text message off a screen? That would seem like the most basic thing, right? And you hear this thing is not better than that robot Sophia. And you know, so I guess Sophia is linked up to like a database, a mainframe somewhere too. I mean, you're going across the mainframe, you're getting a computer. My phone's text recognition isn't that great. You know, everybody fantasizes about technology, but the reality is it's actually kind of a very slow pace that moves in fits and starts. And sometimes to make an advance, and just like a stock, by the way, I mean, you look at a stock chart, and sometimes there's an advance and everybody gets all excited and starts extrapolating that we're going to be here. But the reality is you end up here. You know, it's like some breakthrough comes and everybody goes, oh my God, it's a breakthrough. Look what's going to happen. It's going to go to the moon, blah, blah, blah. But then you get up to here and you hit a resistance point like Intel is at right now. They're at a resistance point because obviously, you know, like Intel, because we were talking about Intel and we just invested in Intel, even though Intel's still heading down. But we like this drop. This drop over here, we like this drop. We thought at 50 would hold, it's not holding. A lot of people are getting out of Intel, but that's fine, let them go. Something that we don't give a crap. But we came in at 50, and so the thing is, what happened to Intel? Well, good serviceable company, made a little bit of money, then people were disappointed they didn't make as much money, and now they're back up, and then people are disappointed they're not making as much money. But the bottom line is they're making plenty of money. They're making scads of money. They're making incredible amounts of money. Where do I have this? See, remember last week I lost my stuff. So I don't know where anything is right now. Futures, disclosure, So I gotta make a whole new copy. And we're gonna say, invest. Dude, what is that thing I look at? What's invest view? That can't be it. No. Damn it. Hang on a second. I will find out on my other computer what it is I look at. All right, that's my new favorite, is macro trends. It doesn't show you as much stuff, but as far as a chart, it's a good chart. So let's go to macro trends. Macro trends. It's my new favorite because it's really just very basic. And it gives you a lot of years, and to me, more data. I like having more years, right? I want to see the trends. So this one's called macrotrends.net, and I don't know how to work it other than just to change the thing up here, but that's what I do. I just change the whatever's up there. So we put in Intel. It doesn't show me as much stuff as my other thing, which I forgot the name of, but I like that, and it's in. Oh, I don't remember the name, but whatever it is, the one that I usually use has other information about the company. This does not, although I guess I could probably find it somewhere. But for me, I just basically, this is the number one thing I want to see is what do the revenue trends look like? So here's Intel. Forget 2009, that was a bad year, obviously. But they went through the crisis. Well, let's not forget 2009. They made 30, 38, 35, 38, 37, 35, no progress. You know, but they were making about the same amount of money through the last crisis, right? And nothing really affected them. So here we are again in a new crisis, and now instead they had some growth. Then they get to 60, and they go 70, 70, and even in this crisis, they're still trending around that level, a bit less. Profit-wise, that could be all over the place because they're cyclicals, but they go, you know, 5, very bad, 16, 17, 15, 12, 13, and 20, 20, 20. That's nice. I'll take that. all right? And I think the whole company is priced at a couple $100 million, I think is the price at this level. So, you're trading 10 times earnings. It's a very steady company, very solid growth. Why would you get out of it? It's the same thing I would say about LB, and nobody wanted to be in LB, and now LB is taking off. I don't care if people don't like it. Okay? I'm not a popularity contest. You see this? I don't give a crap that other people don't want to be in a stock. I don't give a crap what the chart looks like. I care whether the company makes money or not. That's how you invest in things. If I'm buying a business, I say, well, how much does this business make? And you guys gotta know this, and you do know it. Most of you will know this, right? If you're buying an actual business, and someone says, I want you to invest in my ticket selling business, right? So what are your questions going to be? Okay, how many tickets do you sell? How much money do you make? How steady is your business? What is my money going to do? How is my money going to expand it, so on and so forth? Well, if you're investing in a public company, your money's not going to do crap to expand it, right? That's not a thing. So that's not what this is going to be about. Your money doesn't even go to the company. It goes to the last guy who bought the share. So you have no effect on the company when you buy. So now all you're investing in then is what is the operation of this company and what is this company's future operation and future perspectives. So, everybody's got opinions, obviously, but that doesn't mean they're right. And what you've got to do is look at the real business of a company. Okay, limited brand, as I've said over and over again, they've got the candle company and they've got Pink. And everybody likes to say Victoria's Secret because they're very associated with Victoria's Secret, but Victoria's Secret's over. It's not a big thing anymore. It's not a factor in their earnings. It's not where their money comes from. Their money comes from Pink, which is Victoria's Secret Junior, which my children wore since they were teenagers. I think basically as soon as they become teenagers, the kids can't wait to go into Pink and buy stuff, and they're loyal to Pink all the way through college. It's like the thing. And it's not sexy crap like Victoria's Secret. It's comfortable, nice, underwear and jammies. That's basically what underwear, jammies, and sweats. But they love the bras, they love the underwear. It's like the only brand they want to have, and they like all the little logo stuff that they wear. And it's a big thing. And they're going to get older, and they're going to keep wearing it. And yes, Victoria's Secret, that frilly, lacy, blah 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 stuff. That we're in a downturn for that kind of thing. We're in a frumpy era for sex, right? Sex comes and goes with the times, and we are currently not in a flaunty sexual time. So Victoria's Secret model for that is going to be out, and that means essentially that brand will be de-emphasized. But it doesn't mean it won't make a comeback, because as we know, fashion comes in and out, and so one day, sometime, girls might start wearing that stuff again. If they do, they're going to be there. If not, they're going to emphasize their Pink brand. All right, and meanwhile, people still give candles as gifts, so that's great for them too. Anyway, just basic stuff. And the same thing goes also in the underwear thing. This was my stock of the year a couple of years ago, and I said it was going to come back and recover. And HBI was my runner-up. Same business, same thing. Okay, they go down for no good reason. They come back up because they sell freaking underwear. It's Legs, it's Hanes, it's some other basic brand, Champion Sports. That's what HBI is. Basic stuff that people wear all the time. All right, and the crisis doesn't really stop you from wearing out your underwear or stop you from getting a new thing, a new bra or whatever. It's just, it shifts it a little bit. It's a little interruption, but it's not permanently derailing the business. And that's what value investing is about. Value investing is about looking at this and not saying, oh my God, it's going to zero. It's about looking at the business and thinking about it rationally and saying, okay, what do they do? Just like you're buying any business. How many customers come through the door? Who's buying what? What are your revenues? What are your prospects? And you've got to look for bargains. Okay, this is the worst thing you can do when you start extrapolating on fantasies. When something goes through the roof and you think it's going to keep going through the roof, like here's a great example, right? Here's a Tesla. Okay. This company, Tesla, which we all know and love, has been trading at or around $1,000 or $800 for a long time. All of a sudden it popped back up, but nothing really changed. So in this case, it's a devalue investing. We don't believe in this, but the point is, you don't go get sucked into it just because it went up there. At most, you might want to say, oh, it's going to stay in this uptrending channel and keep going. So fine. That still doesn't mean that 1800 is realistic. It means it's going to, if this channel gets to 1800 over here, which is, let's see, July, August, September, October. So around the end of the year, right here, maybe September, October, you're going to be at 1800 will be the top of the real channel. That's when we'll get to 1800. What does that mean? That means I could sell the September 1950 puts, which we did. I'm sorry, calls. Sell the September 1950 calls, because I seriously don't think this is going to move the channel up over that. I think that we're going to come down and up and down between that. We have the 1250 short calls that expire in I don't know when, maybe August. And I still think that range will get hit again. Now, if we had, oh, wrong place. If we had higher calls, I'd be worried. But 1250 seems like a pretty reasonable position. And if not, we're going to roll it. Short-term portfolio. Oh my God, 461. Wow, went up a lot. Yeah, September. So September 1250 calls. We sold them for $100. So our target is 1360. We're over our target right now, but I think we're going to come back. And maybe I'm wrong. If I'm wrong, we're going to have to roll them. But are we going to come below 1360 in the next couple of months? Well, this line isn't going to stop them, the support line. And we'll be thrilled if we get out of those things even. That'll be fantastic for us, because well, right now we're behind $150,000. So all we have to do is get out close to even. We're going to be very, very happy. And then meanwhile, as long as it doesn't go over 1950, we're going to cash in on those calls. But the same valuation comes into play on the way up or the way down. You know, you can say, you can fantasize anything you want about Tesla, but you have to say so. They're okay now. They're worth here to the same as Toyota. And clearly they're not. All right. I mean, clearly they're not. You know, it's like if some baseball player has a good couple of games and is on a hitting streak, and then you start saying, oh well, he should be getting, you know, and this guy's getting paid $1 million a year, and meanwhile some all-star who's been 10 years in the all-stars games is getting paid $20 million a year, and you start going, well, he's got to be worth the same as that guy, because that's what Toyota is. Toyota is a 20-year all-star, still in their prime, you know, constantly selling millions of cars, billions of cars, and making tons of money, incredible amounts of money. And Tesla is having a nice streak. But that doesn't mean that they're worth the same. It's ridiculous. And you have to use a benchmark, and your benchmark has to say, if Tesla is really worth 300 billion, then Toyota must be worth 700 billion or something like that. And then you have to look at the physics of it. It's like the world and the economy can't support all these trillion-dollar companies. In fact, they're all on the Senate now testifying, right? In fact, I think it's starting right now. So the big companies, Google and Facebook and Twitter, are all having to go up and testify now and explain themselves. They've got too much power. They do. I mean, so Congress has too much power also, so I don't know who they're talking to, but they've all got too much power. These are ridiculously gigantic monopolies, and Congress is trying to do something about it. But on the other hand, what they're really doing, the subtext is they really don't give a shit, except that they allow, they've been trying to ban hate speech, and that's costing the GOP the election. They need that hate speech to get people to vote for them. So that's what this is really about. It's really about striking back and attacking the media companies, because they're viewed as being too liberal by the Republicans on the Senate. But then on the other hand, the Democrats don't like it either, because they're like, dudes, this is huge, ugly monopoly. So for different reasons, they're having to testify and excuse themselves, basically. But I wouldn't worry about it too much, because, you know, we saw what happened when the bankers testified. We saw what happened when the oil companies testified. Nothing. You know, they get up there, they talk, they make a big show, and that's the end of it. Where are we? Tesla. Who we're going to talk about? Banks testifying. Tech. That's right. Facebook. Look at Facebook with their crazy valuation. You know, Amazon. Wow. I mean, come on. It was 2000, and it was perfectly happy at 2000, 1800, all this way, and all of a sudden, 50% more. What, because of the virus? Because from now on, we're all going to be shut-ins and live on Amazon forever? You're making too many suppositions. So, you know, earnings are tomorrow. We'll find out. But are they worth $1.5 trillion? $500 billion of that money, $506 billion, has been gained in the last 3 months. Are they really worth that? Because now we go back to the magic chart thing, and we put in Amazon. And okay, so look, earnings growth, fantastic, up, you know, 12, 19, so that's about 20%. This is about 20 something percent. This is another 20%, I guess. 232, how do you get there? 60, that's a huge percentage. That's like 30% more. Then you go to 232.80, that's 20% more. So you're getting 20% annual growth. Is amazing. Profits cranking too. Look at that. I mean, I forget that, but 2 billion, 4 billion, 4 billion, 12 billion, 12 billion, okay, or 14 billion. So profits are cranking, growth is cranking, and you have to say, look, sometimes they're expanding, sometimes they're not, but now they just can't help themselves. They're just making so much freaking money. They can't help it. They can't stop the money flow now. It's too much. It's just going to keep coming. It's like a floodgate opened up, and now it's going to keep coming in. So let's say, in reality, though, let's say that they expand, because right now, I don't care, $14 billion, it's still 100 times earnings. 1.5 billion, still 100 times that number. That's still real expensive. So how fast can they grow into it? Well, let's say they grow, because they're only running at a 5% margin. The same as Walmart, really. I mean, their income after tax margin is not even 5%. It's like 3%, right? Because it's 11.6 divided by 280.5. 4%. So 4%. So they have 4% after tax profit, and $1.5 trillion divided by 11.6 billion, 129 times earnings. So how long are they going to take to grow into 50 times, 60 times earnings? Okay, they have to double their sales. So 280 times 1.2. Let's give them 1.25. Let's say they grow 25%. So then we got that, and then 1.25 again, and 1.25 again. Nope, still not there. Times 1.25 again. Still not 560, but we're getting there. So let's say 1.25 again. All right, there you go, 550. So that's 1, 2, 3, 4, 5 years of 25% growth away before you can anticipate Amazon only trading at 60 times earnings, assuming it stayed at this price. So if Amazon stays at this price and they grow 20%, 25% a year for 5 years, then they'll be trading at 60 times earnings. This is not a value stock. I don't know. I shouldn't have to explain that, right? I mean, I shouldn't have to make it any more of a statement than that. This is not a value stock. We don't trade it. We do trade. We had it in the hedge fund, but we had it in the hedge fund. It was like an 1,800, 2,000, or 2,200 spread. So we had it in the hedge fund 50% ago as a spread. Now it's like miles in the money. See if there's any questions. No questions. Fantastic. Okay. All right. Good. So I can just keep going on about random stuff. All right. So the CEOs are testifying for the tech companies, and we got Google also. You can take a look at Google, but everybody's ridiculous. All right. Oh, that is the one I want. GOOGL. It's another one. They're only back to their highs, Google, but their high. Their high is $1 trillion. And now, see, the funny thing about poor Google, though, is that Google's running at $1 trillion. I think their business is way better than Amazon's as far as like it's an impregnable fortress. They make $30 billion. They're trading at a completely reasonable. They're trading at 33 times earnings. They're a complete, or 35 billion, so 30 times earnings. They're a completely reasonable company compared to Amazon. And who's more likely to be displaced? Google is a massive search engine conglomerate with all the best tech and all the best algorithms and all the history and stuff. It's very, very hard to jump in and be a new search engine. That's why nobody's done it. Microsoft tried. Microsoft, freaking Steve Ballmer wasted God knows how much money trying to beat Google and gave up. You know, with all their resources and all their money and so on and so forth, Microsoft failed to come to beat Google. Apple didn't even try. They said, screw this, and they joined up with Google. Very wisely, too. You don't see new search engines anymore. Why? Because Google has indexed everything in the world for the last 20 years, basically. So they've already got it. For you to catch Google, you have to go and index everything in the world for 20 years without being paid for it. See, that's the trick. Google was being paid to do it. You would have to do it on spec, and your business plan would have to be, we're going to spend $500 billion in order to do what Google already does and to hopefully get some percentage of Google's market share by having a better search engine. So your search engine better be freaking spectacular. And then Google keeps improving theirs and changing theirs. So it's not even a fixed target. It's not like you say, nobody likes the old decaying tech of Google or something like that. You know, and it's, you know, this is why McDonald's has competitors, because McDonald's is an old dinosaur kind of company, and they do things a certain way, and they give you very mediocre food for good prices. You know, they're Walmart. McDonald's is a Walmart of food, basically, the Walmart of hamburgers. They're cheap, they're everywhere, and everybody knows that it's not good, but at least you know what it is. You know, that's pretty much Walmart for food. You know, that it's hard to compete against McDonald's, but people do, because they say, well, we could make a better hamburger and we could charge about not much more money, and people will come because it tastes better. And, you know, yeah, sure, you got Smashburger and you got Sonic and you got Wendy's and you got whatever. You can challenge that model because the individual choices of making a burger are local. Like there's a place in Jersey called White Manna Hamburgers. They're more like White Castle. And in fact, I think White Castle stole their deal back in, you know, a long, long time ago. But White Manna is like a little greasy diner with 4 seats in it or something like that. And they make the food like White Castle. They make it right in front of you, but there's no glass or nothing like corporate. It's just like the freaking, you're sitting there in front of the grill. I guess these days it must be different, but you'd sit there in front of the grill and the guy's like making the hamburgers and the grease is splattering into your face, the little hot drops of grease while you're watching, and he's flipping the burgers and he puts the onions on and blah, blah, blah. It's the same as White Castle, except just right, like literally as if you're in the guy's kitchen. And then they would get it. And if you want a milkshake, the guy has to go in the back and get you a shake. And if you want any special anything, it completely makes them pissed off and they get angry. But they are freaking delicious, and they're not like White Castle because they're actually like thick. They're square, but they're thick square hamburgers. Like it's a different concept and totally fresh. Anyway, so there's a line out the door. So the point is, that's the point. There's a McDonald's across the street from the one in Hackensack, but there's a line out the door for White Manna, and especially when you go to a ball game, everybody loves to grab them on the way to the Yankee games or the football game because they're pretty close to the stadium. And it's just like White Castle. You buy a bunch of them, except in this case, you have to actually go and order. They have no driving. They have nothing. They don't accommodate people. They're basically annoyed to see customers on a regular basis, but it's the best. Anyway, so you can compete with food because there's not a big barrier to entry because you don't have to do anything special. Just make food for the people in the area. But if you want to have a search engine, your search engine has to be inclusive. If it's not inclusive, nobody wants to use it. Therefore, you have to index everything first, and then you have to get customers. You can't build it as you go. You have to first do the backlog and get all the work done. We have this problem with the judgment search network, which I'm building. If I hadn't done it before, I probably wouldn't want to do the project. But I was in a business 20 years ago that had real estate data, and then we decided to add judgment searches to our real estate data 20 years ago. So there was a huge monopoly, and to do the judgment search records, we had to go back 20 years and get all the records. Now, that meant that we had to, on spec, get 20 years of records. In case our clients wanted one, we had to have them digitized. Meanwhile, the existing company, our competitor, they had a monopoly. And the reason they had a monopoly is because nobody wanted to put in the time and effort it took to digitize 20 years worth of records. They had already done it because they were doing it manually, and then they digitized it as time went on. So they were doing it for their base. That's what Google has done. Google has digitized the entire internet for their base of customers as time has gone on. To go back and catch up to Google would be a monumental effort. Here's Google spending 20 billion a year, 12 billion a year, 10 billion a year, but you have to figure this is a modern cost. The cost of data is increasing, the amount of data is increasing. But let's say it's 10 billion a year. You'd have to spend $200 billion on data gathering just to catch up to Google. Forget the cost of marketing, forget the cost of the tech and everything else, and the investment in the computers, and so on and so forth. You would have to spend $200 billion just to be in a competitive position to Google before you start. Then you have to say, use Gaggle, not Google, or something like that. And then you have to build awareness and get branding and so on and so forth. And you're going to do all this so you can get half of the market at best. Doesn't matter if Pepsi tastes as good as Coke. It matters that, they did that Pepsi challenge thing back in the day. Doesn't matter that Pepsi tastes as good as Coke. What matters is you're not going to get everybody to believe that. Half the people are going to still use the thing they like. So you would have to have a serious competitive advantage to Google, something that consumers like to use, but not just consumers, because Google has made themselves attractive to advertisers and consumers. So it's a very solid, very defensible business that's very hard to compete against. Airlines, as much as you hate them, have a very solid, defensible business. Why? Because they've tied up the gates, they've tied up the routes. Those routes and gates are valuable items. They have those things. You can't just start another airline and park at Newark Airport. It doesn't work like that. You have to have gates. All the gates are taken at Newark. So the only way a new airline gets in is by trading gates with other airlines or by buying another airline. You have to buy another airline to get in. So fine, let's buy Frontier Airline and revamp it. That's what Alaska Air did with Virgin. Alaska Air bought Virgin, and they bought Virgin because they liked their planes, they liked the configuration, they wanted to upscale their brand. So they bought Virgin, and then they went on to try to convert their own brand to it. I don't know how they're doing. We were investing in those guys for a while. ALK. We were liking them. See, they're down again. I do like them, but I wouldn't buy any airline right now. But they had done very well because they came back from being quite a bit down. You know, this is, again, a business that has some moat to it, but not entirely defensible, because I can come in and buy an airline and have the slots and start competing with some of the bigger airlines. But I still won't have as many slots. I still won't have as many gates. I won't have as many routes. It's hard to put together. Even Southwest, who's a very, very successful airline, they still have had trouble penetrating airports because they don't have the gates, they don't have the routes, their competitors were blocking them from getting into airports. It made it very hard for them to expand. On purpose, people didn't want them expanding. They don't want a cheap airline expanding. And the airlines have frozen out many cheap airlines over the years and have beat them down until they went bankrupt. That's what they do to defend their position. But Google doesn't have to do that because it's just too freaking expensive to compete. But then that's why you have a Senate hearing, okay? And say to these guys, what's this about? Why are you like this? How come your position is like that? What are we, why aren't we regulating you if you have such a monopoly? So, so again, when you look at these charts, it's not just about the squiggly lines and how something is going. You have to think about what the business is like. Why did Alaska Air fall off like this? Fell off because of the virus. How long is the virus going to last? It's going to last until March. Okay, when are people going to get excited? Maybe when there's a vaccine or something like that, and people start wanting to fly again. There's going to be a lot of pent-up demand. But I don't want to bet on when there's going to be a cure. We don't know that they're going to survive. We don't know what their books look like. These are all risky bets. But some airlines are going to survive and do well. There's a American Air, there's a Delta. They're all like that. And they're all like that for good reasons. They all have struggling capital. They're all possibly facing restructuring scenarios. This is going on much longer than they thought it would. They're not getting the kind of bailout aid they thought they were going to get. So all this excitement fell apart, and now they're back to the doldrums. But while it's tempting to say, oh, they must be a bargain, not necessarily. You got to see what the quarterly reports look like. You've got to see the signs of life. You've got to see how many people are really flying now. I'm not flying. My kids won't even fly. I don't know a lot of people who are flying. In fact, I'll tell you. I'd say 1, 2. I literally can count on. I easily can count on one hand out of hundreds of business associates I talk to on a regular basis. I can count on one hand how many people have flown somewhere in the last few months. Whereas my life is usually, hey, I'm over here. Where are you? I'm here. I'm here. You're there. Okay, we're there. Where are you now? I'm here. That's how me and a lot of my peers live our lives. We travel constantly. We're always somewhere else. I barely even drive my car right now. I'm sure most of you guys are the same, right? We don't go anywhere. We don't do anything. How could that be good for the airlines? How long can they survive? Well, if they're saving on fuel costs, they're saving, but not really, because a lot of these guys are still flying planes. That's crazy too. They're flying empty planes all over the place. Now, I talked to some people. Somebody I talked to who went on a flight, said it was crowded. They said they couldn't believe it was crowded. But I think they just have less planes, and they're flying a lot less planes, and they're full. But then the full planes freak people out. But that doesn't mean that people are willing to spend more money. In fact, I think people are spending no money. And Google, let's see. Thank you, Google. No, not that. Make a new window. See, that's how I know so many tabs. I always make a new window. Fort Lauderdale. to NYC lights. Not Cheapo Air. Where's Google? I thought Google was supposed to tell me this stuff. There you go. $27. Freaking Spirit, though. You may as well shoot yourself. connecting now. Look at that, though. Nonstop, 118. Nonstop, 127. These are good, all good prices. So when do we want to go? Let's be reasonable. That's not a reasonable time. So let's say, could you imagine landing in frickin' LaGuardia Airport with thousands of people all over the place? I can't even think about going there. I can't do that. I would just freak out. Let's say we go on August 14th and come back on the 23rd. So we'll do 14th to 23rd. That's the trip I would actually take. So 14th. Nope. There you go. 14th to the 23rd. Thank you. Done. Oh, still no shit. Look at that. Wow. So obviously nobody's flying, right? I mean, they look at this. They can't give these freaking seats. Look at that. Are you kidding me? Oh my God. Dudes. Holy cow. That's freaking United. JetBlue. Delta. Holy crap. Come on, guys. I mean, seriously, how could you, how do you think this is not a problem? You think United's going to survive on $27 seats? Let's see, what else can I do? Price connecting. Can I even, economist. I'm going freaking first class, dude. What do you got for me? Oh, $500. Nice. Look at that. Wow, I almost want to go. Go see my kids, hang out. So I don't want to go to LaGuardia. I don't want to go to any airport. That's the problem. I have to go to the airport. I have to stand in that line. What do they do? Do they socially distance? Have any of you guys been traveling? Because it's crowd, right? I mean, you get stand in that little windy snake line to go into security, and then you got to go through the other windy line. First, you get the guy who does your passport or whatever, and then you have to go to the next windy line for your luggage, where you're standing next to too many people. Then you go into the terminal. Then you're waiting around in the lounge area with 300 people. No frickin' way. No, thank you. And the whole time you got to wear a mask, and they want you to wear a mask on the plane. Could this be like a less pleasant experience? I miss the days when you only have to worry about blowing up, right? It's like, oh, maybe somebody will bomb the plane. Oh well. Let's see. All right, so boy, that must be fascinating. There's no questions except for Theo says, Imax earnings thoughts. Let's not waste any words there. Hello to you too, sir. I have no thoughts on Imax earnings because I wasn't even watching them. I'll tell you the truth. I just was not a thing for me. I don't think we have any Imax, do we? If we do, I forgot. Well, Imax, all right, this is interesting. So lost narrower than expected. So how bad is it? Well, there's a good question. Let's take a look. So, what happened? That was weird. Let's try that again. 44 cents a share loss. 32 cents a share. They earned 32 cents a share. So that's obviously going the entire opposite direction. Revenues of $8 million. That is sad. 91% down from last year. The entire theater network was closed. All right, blah, 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 blah. Wow. I don't know what kind of opinion am I going to have over it. It's a shutdown company. Countries, 41 laser systems company backlog included. They still have a backlog. Interesting. Nothing about cancellations. That's interesting. New business revenues. New business generated 600. What new business? I guess people are still making films, distribution, production, other revenue. Oh, it's only thousands. Oh no, that's nothing. Sorry, I thought there were millions. Margin contracted. EBITDA credit. G&A decreased. See, they didn't cut much expenses, did they? R&D decreased. They didn't cut that either. Operating income. Wow. So that's $26 million. That's the key to the whole thing. So here you go. Then we plug in Imax. And now we got to contemplate the business, right? We got to think about what's this going to mean to these guys. Well, look. Normally, they're doing 300,000-400,000 in business. And normally they're going to make, dun, 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 dun. Well, that's kind of fun, right? So where'd that go? Oh, there it is. So normally they're going to make $40 million, right? That's a pretty typical year for them. They make about $30-40 million. So this year they didn't, but for whatever reason. Okay, in fact, that's why we started picking them up, because they had a bad year and they dipped, and then we started buying them. Now, so you say, okay, fine. So that's good. So they did for $40 million a year. Now, what's their balance sheet look like? How much money do they have? Well, they got $100 million. How much are they losing? They are, what happened here? They must have borrowed some money. Oh, that's going to throw off the whole thing. Okay, well, they apparently borrowed a whole bunch of money. They didn't do debt. Oh, it's hard to read. Okay, there's nothing below that. Income, retained earnings. All right. Well, look, bottom line is that they picked up a bunch of money. So they're in no danger of going bankrupt. All right. They're in debt, but they're not going bankrupt. And then you have to go back to take a look and say, well, go back to the income statement. And you say, how much are they burning a quarter? They just lost 20-something million. These are quarterlies. So income after tax, stop that. So they lost 58 million last quarter, but they only lost 23 million this quarter. They've got 300-something million in cash. Even though it's borrowed cash, they're going to be around. So the bottom line is you can still invest in Imax for the long term. But again, there's no hurry because it's not coming back now. We're not curing the virus tomorrow. You're not going to be missing much. But do I like them as an investment down here? Sure, I do. You're getting them for a great price. You're getting them for $600 million. And we already determined that they can make, in a decent year, they're going to make $30-40 million. You're getting them for 10 times, 12 times earnings, not even accounting for future growth. So yeah, of course I like them. But you got to ride it out, and they have short-term options. That's why we got annoyed with them, because the short-term options weren't paying us well enough to it wasn't killing us, but it wasn't really worth it because I wasn't able to sell enough stuff. So they fell off our radar. We said, you know what, given the volatility, given where we are, it wasn't worth pursuing, but it's still a great company at a great price. Oh, here's Tim Cook. Is Tim Cook testifying? What are you going to pick on Tim Cook for? God, to say thank you, sir. Thank you for the devices I actually use every single day. Like that's. Thanks for not messing up the company. Thanks for not being freaking Steve Ballmer, right? Could you imagine? Could you imagine if somebody took over Apple and was like Steve Ballmer and completely wrecked the company and like ruined Apple? Oh my God, that would be a disaster. Oh God. Oh, there's Zuckerberg. He's got us. Oh, these guys are making statements remotely. They're not coming in for these testimonies. Oh, what fun is that? Mark Zuckerberg looks like Max Headroom. Anyway, so where were we? All right, stuff. So what else is going on in the short-term portfolio? Let's see. We got sugarcane doing okay. Apple, of course, doing okay. JP Morgan doing okay. The SDS spread is down 15,000. That's fine. TQQ is basically flat. I love that. Chipotle, we have the put spread. No, what do we have? What is this? Oh, we sold these calls. Okay, so we sold these calls. And we're down a bit, but it's a hedge. So we do have a put spread. We have the long-term 950 puts. We sold the short-term 950 puts. These guys are going to expire worthless. They're already pretty worthless. And then we're going to sell some more. So the net cost of the spread was 62 minus 19 minus 34. So 42, 37-ish. So it's $37,000. And if we sell these, because we sold these in July, and we sold the August puts, so we only sold them they only had like a month and a half in them. So we made $3,400 in a month and a half. We have 18 months to go. That means we can make 10 sales of this, and we're going to pay for the whole spread. So this is going to be a free spread. We're going to roll those calls. We're going to have a free spread. So whatever value remains in these puts is our profit. Or if there's no value, it didn't cost us anything. But what happens if it does go down? If it goes down, we have a fantastic hedge, and we're going to make a fortune. So don't forget, we did this because the market kept going up and up and up, and we were looking for hedges that wouldn't cost us much in the end. So this is, although you might see a loss here of $20,000, it doesn't matter because we're going to sell more than $20,000 worth of short puts. And if it ever does go down, we're covered because these 950s are obviously worth more than 2 short puts, and we'll roll the short puts and we'll end up in a vertical spread if CMG goes down. But it's overall, it's a hedge. And that's another one, by the way, because if you look at CMG, like, really? They should be like up 50+% after the virus? For what? What do they do? I mean, that's going to be an earnings. There's when you get short into earnings, probably. That's going to be crazy. They have their earnings already? Funny if they had them already. I don't think so. Oh, no, that's dividends, silly me. Where's the earnings? They don't have, they did it. Oh, that's not even CMG. Wow, Canadian Bank is doing good. I was like, they don't pay a 6% dividend. Oh, October. So they already have their earnings. All right. Well, shows you what I know. Who's saying this? Investors Business Daily. Is Chipotle a thing? The Q2 report bodes well. I paid no attention to these guys at all. Chipotle, digital sales shine. That sounds good. Let's see what that says. Revenues decline. Okay, all right. This is what kills me. Revenues declined by 5%. Increase in the number of restaurants. They have more restaurants, but the revenues decline. So there's a 10% decline in comp store sales. That is horrifying. Comps declined 24% in April, another 7% in May, grew 2% in June, but that's from minus 31%. This is crazy. Order ahead transactions continue to drive. Okay, so order ahead transactions continue. So a lot of people are ordering and picking up. Digital is up 200% and accounted for 61% of the company sales. But that's not necessarily a good thing because company sales are down significantly. All right. So in other words, if I sell 5 Cokes, right, and I sell 95 other drinks, and what happens is my business slows down and I sell 50 drinks, but now 10 of them are Cokes. So my sales are off 50%, but I'm selling 10 more Cokes than I used to sell. So what? How does that help? It's how much your business is doing, not how much like these people who are refusing to eat in the restaurant. When business comes back, they're hardcore Chipotle people eating in the restaurant, eating at takeout. They are not, after the virus, going to eat out and order at the restaurant. You're just moving the taste of your crowd. They just shifted to order more Cokes, and you're getting less business anyway. How is this a positive? I mean, people are freaking nuts. So the company's owning restaurants, blah, 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 blah. I'm torn what this means. This guy's smart. I'm torn what this means to the company. On the one hand, it's clearly valuable to have millions of customers with your app offering rewards. On the other hand, I believe improved online ordering become a table stake in the restaurant industry. The 10% decline in comps led to meaningful sales deleverage in the quarter. Restaurant margins declining significantly. The combination of lower revenues margin led to a 90% decline in earnings. In the terms of balance sheet, they remain well positioned with $935 in net cash. Didn't repurchase any shares. How is this a thing that should make the stock fly up? Oh, that's gold. I mean, it didn't fly up, but I mean, honestly, like they dropped off a bit, but then they stabilized. But how is it good news? I really don't understand how people are valuing things these days. All right, so what else do we have? We have the SQQ's a hedge, of course, and that's down about $30,000, or let's see, yeah, about $30,000. And Tesla, of course, is down significantly, but we've got to, if it drops, that's our hedge. We're gonna make that money. And then UNG doesn't matter, but gas is doing okay. We have the 812 and we're already at 11, so we're in good shape there too. So that's a great portfolio. Everything's going well. Oh, where's the Fed? What's the Fed doing? Up 2 minutes. Almost. I almost forgot. Oh. What is the value? 200 billion. In terms of revenue, it's around 100 billion. Blah, blah, blah. Watching the reading testimonies. They're interviewing the Google guy now, who I don't even know his name anymore. Google has become a walled garden that keeps users within its site. Who's this guy, Collins? Collins is really after Google. Well, that's exciting. Okay, so cheap flights, but nobody wants to get on a plane. Who's got on a plane, guys? Come on, let's do a quick poll. What am I doing? Why am I writing Google? Fed, FOMC, meeting. Oh gosh. Excuse me. What do you think Powell will say today? Stay the course? I don't think that's an option. I think they've really got to be a little bit more proactive right now. Oh wait, here's a long question. Phil, it'll be good to hear your perspective on risk management. Joined after March 23rd. How do we prepare for the worst case? How do we measure the worst case scenario? I have portfolio margin. How much cash and maintenance excess should I have? How many positions should I have? How do I allocate capital to each ideally? Holy crap. Geez, SK. I would seriously read the whole education system on our blog. I would also read the portfolio reviews so that you can go back and read all my comments that I make about all these things, because I cannot possibly in less than 3 or 4 months tell you all these things, like right off the bat. Look, generally, I advocate a very cashy position with very heavy hedges right now. I'd be very, very careful. It's not worth it. It's not worth gambling on gains when you might lose more than you win. It's just not a very good investing environment right now. So the thing I would do is be careful. Pick up high quality stocks that are going to be around forever, like blue chips, like Intel, when they come on cheap. But don't go chasing things under any circumstances. I wouldn't run after any of these stocks that are making new highs. I want to see people who make lows. I want to see companies that have disruptions in their business, disruptions in their supply chain, that are most likely going to repair themselves after 6 months or so. I'm in for the long haul, but honestly, that's all I want to be in. We barely picked a stock in the last month. It's just not there. And in fact, read my top trade review that I wrote not too long ago. I mean, you got to just read what I'm saying, because I mean, I'm telling people over and over again, it's like this is a very, very, very bad, very dangerous investing environment. Oh, Fed extends I knew they'd do something. Fed extends the bank dollar and repo swap lines to March 31st. Okay, that's all the way to March now. The Fed is going to keep this incredible, crazy, easy money, and they're just pumping money into the economy at an incredible rate. I think it's like $100 billion a month being pushed into the economy. What else are they doing? The economic assessment has been modified. The Fed says it's committed to using its range of tools to support the economy in this challenging time. We'll take a look at it. We'll take a look at the actual statement in a minute. Employment has picked up somewhere, but well below the levels at the beginning of the year. Wow, really? This is what we pay them for? Significantly lower oil prices, blah, 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 have helped keep back inflation, even though nobody's actually driving their car. I mean, obviously one thing leads to the other, right? So, look, on the bright side, this pretty much is the worst case scenario. Getting real with global GDP worst case. Really? Ooh. Why do I have to tell it it's PhilStockWorld? Why doesn't it know this? Who else wrote this article? Me, that's who. Because I'm the bad guy. The bad guy. Here you go. So, answer is this article. That's one way to look at it. There's your worst case. So, look, keep cash handy. When you see a bargain, you know it's a bargain, and take advantage of that. What do I think? Okay, so what Pal say, and Intel, please discuss the trading plan around this. Bernie's asking for a trading plan around Intel. The trading plan for Intel is hold on to it and wait and see what happens. It's not a complicated plan. We put our foot down at $50, and now we're going to wait and see what happens. And my trading plan 6 months from now is going to be wait and see what happens. Unless it gets significantly cheaper and we continue to believe it's a bargain where we might double down. But unless it's down at 40, I'm not very interested in it. At 40, I would most likely buy some more Intel, and above 40, I've got no interest. We're just waiting to see if it goes up, and if it doesn't go up, we'll make another move in, about a year from now, or 6 months, 8 months from now. We'll make a move when the 2023s come out. But it's a long-term play. So we're not looking to jump on and do anything crazy. So where's my Fed? Oh, okay. FOMC meeting. I don't know. Maybe somebody parsed it already. Why am I killing myself? Why? Why am I making an effort? All right, hang on. Open up another tab. Twitter. Log in. Oh, really? I don't know my thing. PhilStock. No, it's got to be PhilStockWorld, right? Phil. Hey, that worked. NASDAQ strong. What does that even mean? That's not Sheila. Did you make her hair that dark? That's weird. She used to interview me all the time. Ugh, I am so glad. Let me tell you something. I'm very happy to have retired from being interviewed, except for like BNN. I got so tired of going on these stupid shows and wasting so much time. Where was I? So what were we going to look at? We were going to look at the Fed, FOMC. Okay. So Fed will maintain increase. I love him. Fed will maintain increasing wealth inequality at the current pace. Fed will keep rates low until company economy is away. Here's the statement. Don't care about that right now. Fed extends repo rate and swap lines. Fed holds rate near zero. Virus poses considerable risk. Fed repeats range of tools to support. Fed on hold. Weak demand, low oil prices, so holding in deflation. The path of oh, here you go. That's what I want to see. See, I knew somebody would do that. So what has the Fed changed in the week? They took out this coronavirus causing tremendous human economic hardship across the United States. The virus and the measures taken to protect public wealth have induced sharp declines. So now they're not saying that anymore. Following sharp declines, employment that's not even good grammar. Economic activity and employment have picked up somewhat in the recent months, but remain well below their levels at the beginning of the year. Okay, so that's basically a new statement. Weaker demand, significantly lower oil prices holding down inflation. That continues to happen. Now they're saying overall financial conditions. That's an interesting change. Have improved in recent months, in part reflecting policy. Now, this is new, but everything else is the same. The path of the economy will depend significantly on the course of the virus. That's interesting, huh? So the virus, and that's it, done. End of changes. Everything else same bullshit as last time. So what is significant? Basically this, the path, oh, that didn't work, can't highlight. The path of the economy will depend on the course of the virus. We don't know what the frick is going on. We aren't changing our policy at all. In fact, it's interesting because Fed holds rates near zero, says virus poses considerable risk. So you read the headlines, we were just reading the headlines before, and they were talking about the Fed continuing this or doing that. Nothing, no major policy change in the statement at all. They're just doing the same thing they were going to do last time. No changes. All they did is change a few words around. It's the same exact statement as last time. The Fed's done nothing. That means the market is going to drop. This is not significantly helpful. So I don't see how this is going to go well. Zero hedge, Goldman. We expect the Fed to describe the main purpose of asset purchases as increasing policy accommodation, supporting. They didn't do this. They leave rates unchanged, current low until levels increase. Now, of course, Powell still is going to speak at 2:30. He may say things that are not in the statement. He does that a lot. They don't want to put it in writing, but he'll say, we're here to support the economy, blah, blah, blah. So we'll see. But people are expecting a lot more than they got out of the statement. So I don't see how that's going to be good for the market. Fed committed, they didn't commit to doing anything. There's not a single word in there about this stuff. They didn't repeat that they're committed to a full range of tools. They just left the language where it was last time. That's not a change. How come people are announcing it? What is their agenda when they announce something that didn't happen? You know, hey, Phil Davis, still 6'1". Phil says he's 6'1". Bill Davis is 6'1". I mean, how many times? I'm 6'1". That's it. You know, it's like you don't announce it like it's a new thing every time it happens. Look, Bill Davis has hit 6'1". It's like, yeah, I did that when I was 13. I've been the same size since I was about 13. All right, Fed coming as you. Thank God, my brother kept growing. My brother's 6'7", and he's almost 6'8". My brother. He kept going. He grew until he's in college. I stopped at 6'1". I'm pretty happy with that height. So Fed as usual, blah blah blah, da 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 da. Yep, here you go. Oh, it's just a gift. Okay, stop. That's what it is. Where is the money? There's no more money. Nothing else happened. 2 words, anticlimax. Remember, the first move is the wrong move. No, the first move, oh yeah, oh, she's right, it is. It's going up. How weird. Going up a little bit right now. Fed translation, the economy is absolute dog shit. We're printing 24/7 to try to keep the Dow from collapsing. The 1% have been bailed out. The 99% of you are on your own. That is a fantastic, I have to retweet that. That is amazingly good commentary. That is a fantastic summary. This, that one I love. I don't know if you guys can see that when I do that, but it's very funny. Fed will keep rates low until the confident recovery is underway. The Fed will maintain asset buying at the current pace. The drones are printing the money. Asset buying, path of recovery. This is useless. Wow. Virtually no changes. June, cleanest red line in history. Yep. Well, I wouldn't say that. I've seen less changes. Oh my gosh. All right, we're on our own, kids. That's it. That's it. You've been helped. It's over. Stop whining. Yeah. You see what it is? So it's like they try, even the picture, they try to spin it as if the Fed's doing something amazing. They're not doing anything. And that's why the first move is the wrong move, because the headlines don't match reality. This is not good. I'm telling you, this is not good. So the answer to that question from before is cash. Dollar is diving. Yeah, well, the Fed's going to keep printing dollars, right? We had that picture a minute ago. The Fed's going to keep printing dollars, that's for sure. How high do you think Barrick will go with this printing money and low interest rates? Yeah, of course. I mean, it's all profit for them. You know, Barrick, gold. Look, gold last year was, well, Barrick was 18, sorry. The actual metal gold. Metal gold, how convenient, that chart's up. All right, so last year, gold was $1,500 an ounce, okay? And Barrick made, this is really simple, G-O-L-D. So last year, Barrick made $4 billion, okay? They sold $10 billion worth of gold, and they made $4 billion. They made a 50% profit. So now, see, you don't need to have a company tell you how they make money, because you can estimate it, you can figure it out. So we look at Barrick and we say, okay, what do they sell? 9.7 billion. Now they have other metals and things like that, so I'm simplifying it. But the point is, what am I going to do? I'm going to take what the hell? $9.7 billion. Now let's do the actual number just to be safe. So $9.7 billion divided by, nope, sorry, wrong chart. $9.7 billion divided by $1,500. 1, 5, 1, 2, 3. $6 million an ounce. No, wait. They sold $6 million an ounce. Okay, there you go. They sold 6.5 million ounces of gold. Okay, so there you go. They sold 6.5 million ounces of gold, and they made 50% profit. So that means their cost of gold has to be, sorry, $9.7 billion. So $4.5 billion divided by, okay, right, $4.5 billion divided by what did we say it was? 6.5 million ounces? Shit. 6.5 million. Let's see if that number makes sense. There you go. They're making $600 an ounce. That's exactly right. Wow. I'm impressed. Okay. So gold costs them $700 an ounce. That's their production cost. That's probably about right. And like I said, they make copper, they make silver. It's not 100%. But in other words, Barrick is the lowest cost producer. This is why I love them. This is why I always buy them, because they produce gold for a very, very low price. Their mines are, they sell off all the mines that cost a lot of money to run, and they buy all the mines that are cheap to run. They'll buy a whole company's portfolio to save 2 mines that are cheap. You know, in other words, any mining company, they've got a variety of mines. Some are expensive, some are cheap. They run them at different costs. Barrick has their own way to lower the cost of mining. So they've got their own systems in place. So they will buy an entire company because 2 of the mines are going to come in at $700, $750. And they'll buy the company, they'll buy that, they'll take those mines, they'll make them more efficient, and then they'll sell every other mine off separately to people. And there's plenty of people who don't mind mining gold. You know, so the company's got mines that range from like $700 to $950, maybe even $1,000 an ounce of mining cost. Barrick buys the whole company, keeps the 2 low-cost mines, and sells everything else. Now, the guy who's mining the gold for $1,000 is still going to make $500. He's still going to be a happy camper. So that's not going to hurt him. So those people make money, and they make small margins on mines, and they're tough, and those operators go in and out of business all the time. Barrick, on the other hand, only wants the cheapest mines. This is why I love them, though. I think their strategy is fantastic. I'm 100% behind what they do. So they leave themselves with all the lowest cost mines. So even when gold is cheap, they still have the lowest cost of production. But in this case, it's a huge bonus for them, but not as much as maybe some other miners. So a miner who is scraping by at $1,500 is going to get a huge benefit from this. Barrick was already making $700, let's say. So they were already making at $1,500. They were already making 50% profits. Their cost of goods is like $750. Oh yeah, we could have done that, right? Because we had 50% profit. So Barrick's cost of goods is $750. That means when it goes from $1,500 though to $2,000, they're making $500 more an ounce. They're going to make $11 billion more over the course of the year. Or no, 6.5. I'm sorry, they make $3.5 billion more this year. But we're not always at 15. We're not always at this price. But whatever the blended amount is, they're going to make much more money. And so therefore, bigger profits and a great gain, and a great thing to hold for the long run. Now, if gold goes back down, they'll make less, but they'll keep making money no matter how low it goes. I would not chase it. I don't like chasing it, but I'm very, very happy with where we are. They're going to make just more money. So the more gold goes up, the more money they make. They're not adding mining costs, and they're certainly not going to go out and overpay for mines. That's the last thing these guys do. And again, this is why I love them. This is why year after year after year I talk about this company. They run their business well. They expand their company. They build a business, and they're a great company. And you can see that here. And look, gold goes up and down, but these guys are doing 8, 11, 14, 12, 10, 9, 8, 8, 7, 9. And they're making, here's a loss because 2009, forget that, 3.5, 4.5, small loss here, 10 billion, God knows what they did there. 2 billion, that's some bad years, but I'm sure they had bad years because gold was down. How low does gold have to go for Barrick to lose money? That's the question. So here they were losing money these years. This drop in gold hurt them, but they keep driving their production costs lower and lower and lower. And where are we? Positions. Oh, I know what we're going to do. So look at that. So here they're not making money, but then we see gold as soon as it comes up, boom, boom, more money, and now suddenly look at that kick over here. And that's nothing compared to what's going on in the quarters. And they are still selling lots and lots of gold. Well, we're not, I guess probably it's slow, but look what happened here. We had in 930, they were making in just this quarter, 2.4 billion, 1.7. Now, obviously, everything slowed down. Basic sales are down. People have no money, so that's hurting them. But they've still got the gold, and they're still pulling it out of the mine. They just start piling it up. And if things come back and the economy booms, or if gold goes in a high demand, in fact, I think Bloomberg turns into like all gold commercials at night. I'm always up late, so I'm like, you get to a certain time of night, and Bloomberg just becomes like the gold selling channel now. So we'll see. But, you know, I like them. I like them all the time. They make money. Look at the income after taxes. It's really not bad year after year after year. And you're buying this company that makes, well, look, here you go. I mean, it's easy to look when you have the charts, right? So, oh, I can't move my thing, though. If you look from like 2017 on, you got to figure these guys are good for $1 billion a year on a regular basis. Oh, there you go. I can do that. So figure $1 billion a year is a fair amount to say these guys make that kind of money. And you're buying the entire company for, that's not it. There it is. Oh. Okay. GOLT. What? Why would that come up? You're buying the company for $50 billion. It's 50 times earnings, but last year's earnings, well, that's not good, frankly, but 50 times earnings on the projected earnings this year. But they're not projecting a billion. Oh, I'm sorry, those were quarters. I'm sorry, the billion a quarter. That's why. So they're going to make $4 billion a year, and that's 12 times earnings. I'm sorry, that was quarters that we were looking at over here. Annually, it's a lot better. That's by silly me. So they're good for 2 billion, but they, you know, the projections are these prices, they're going to be up around heading up this way, 5 billion, 4 billion, whatever. So they're good for $4 billion a year. And we looked at the quarters, remember, and the quarters showed us pretty clearly they were averaging 1. So this is a good price. I mean, it's fine. It's only 12 times earnings. And what if it goes higher? Then it'll be, if gold goes past 2,000, starts getting towards 2,500, 3,000, then Barrick's trading at 8 times earnings. Why would you not want to own it? But from my perspective, I already bought it ages ago. Well, it's completely gotten away now. I've got no interest in chasing it. We like it when it's cheap. Same thing for Wheaton Precious Metals. We liked Wheaton Precious Metals when it was cheap. I'm not chasing it. We liked it when it was way lower than 30. Find something else to buy. You don't have to buy the same thing all the time. Look at Royal Caribbean, RCL. I'm telling you, people are going to go back on cruises. Now, we shorted Royal Caribbean in the hedge fund. You know, we actually shorted them around here because we were like, oh, these guys are screwed. You know, we were like that. But now I like them down here. Not this week or anything like that, but I like them. It's Carnival Cruise. I don't like Carnival. I like Norwegian. I think Norwegian's an incredibly well-run company. How's Disney doing? See, it's not like there's not things to buy. But we don't know what's going to happen. We don't know we don't know when things are going to open up. We don't know when things are going to get better. As I told you guys last time, and I told you in that article I wrote the other day when I said that picture of Trump where he's looking at the, well, he wasn't looking, I made it that way. I know which one it is because I'll see it in the beginning. See, so Dr. Evil, I thought that was Trump. Here, okay. So look, this was last Wednesday. There you go, it was last time. This is what says it all. All right, this is what we're doing now. This is the election. He's screwed, but so are we. Because this is not getting better. And it's not going to get better if he's in charge. So you have to look at the economy and say, well, Jesus, how are we going to get out of this? This was last week, 7/22. Look, there's still some spots left. We still have some brown spots. Amazing. 15 million people, 618. US, I know, is about 150,000 now. Where are we now? A week later. 15 million turns into, oh my God. Wow. Okay, I'm not happy. Seriously? Seriously, we went up 10% in a week? Gotta check that. 722, yeah. Wow. Look at that. 15,228. 16,800,000. You know, nobody in the corporate media is telling you this, are they? You're not hearing this. You're not hearing it in the news. Because the news is owned by the people who are currently being investigated on Capitol Hill. This is the problem. And again, I mentioned this morning. Is he a liberal? Is he a conservative? What is he? There's certain things I like and certain things I don't like, okay? I don't like rich people controlling the media. I think it's a terrible, terrible thing. And you know why? Because you don't hear the news. You have no idea what's really going on. How is this not freaking people out that we have 10% more global cases in 1 week? 10% more in 1 week. 1.6 million more cases than last week. Worldwide. Mostly driven by these idiots with 4.4 million cases. Look at these idiots. Let's see, wait for this thing to change. Watch this chart. Last week we had, we have 722. Last week we had under 4 million. We have 10% more cases. Well, actually on the globe, we're actually on pace for the rest of the world, right? We have the same amount of growth as the whole planet. We have 10% growth in a week. That is 100% more in 7 days. No, wait, in 7 weeks. In 7 weeks, double. That's what 10% a week is. It's double in 7 weeks. 2 months from now, August, September, not even November. 2 months from now. Now, you might say, oh, but what are we doing? We're doing nothing. We're doing nothing different really than we did before. We haven't improved anything. You see how this curve ticks up? See how this curve is ticking up? We haven't done anything. We haven't put protocols in place. We haven't done a lockdown. Trump wants to send our kids back to school in a month. To just basically create a petri dish for the virus to spread. So the reality is nothing is stopping you. You want to follow a trend. Here's a trend that is not going to suddenly reverse on you. This is the kind of trend that does just go a certain way. It's very, very hard to alter the course of this particular kind of trend. Because it's the growth of an organism. It's like trying to alter population growth. It's very hard to do. It's like, it takes many decades to work on it. We don't have decades. So in 2 months, in 7 weeks, so what's today? Today's the 29th. So basically, on September 30th, there will be 9 million people infected in the US. There will be 300,000 people dead. Actually, the decimal grows as fast as that, but you know what I mean. So there'll be 9 million people infected, 300,000 dead. What's going to happen 2 months after that for the election? October, it won't even be election day yet, but it'll be October into November. There will be 18 million people infected 450,000 dead. That's what that picture means. He knows this. He's been told this. It's finally starting to sink into him and all these morons in the GOP, but it's too freaking late. You can't stop it from happening anymore. We had a chance to stop it. We blew that. It is now raging out of control, and we're not going to be able to stop it without taking drastic measures, which nobody is even considering. And nobody told you, because nobody told me and nobody told anybody, that this virus is growing at 10% weekly around the world. That is essentially out of control. Doubles every 7 weeks around the world. So what the frick are you investing in? What are you, why are we sitting here talking about this and that and that? You gotta be protecting yourself right now. Maybe there's some money to be made, maybe there's not some money to be made, but I can tell you for sure this is going to get much, much worse. And Trump said that last week, didn't he, when he started his press conference again? He goes, they tell me things are going to get worse before they get better. Yeah, but worse at this pace? Worse at this pace, 16.8, 17 million, end of September, 34 million people infected, 35 million people infected at the end of September. By the time Trump is running for election again, there'll be 70 million global cases. But what did we just say? It was going to be like 18 million of them in the US. We're still going to have 25% of the world's total cases. We'll be a total disaster. This thing is going to be completely obliterated by red. Europe probably isn't going to be much better. Europe's going to get out of control too. Asia's getting reinfected right now. Japan's still completely covered up. There's not many places you can run to. This is Greenland, Iceland. I don't know what that is, but I don't want to go there. Whatever that is, I don't think I want to go. Even Hawaii. Hawaii was good, but now it's bad. You just cannot get away from this crap. So, Siberia seems okay. Once again, Putin wins, right? He's got like all this uninfected land. Canada's not so bad, although Canada also has no people. That's why. You can say Greenland's not bad either. Nobody's there. Iceland's got people. They got infections. I don't know, guys. So, look, obviously air travel is not going to improve. Cruising is not going to improve. Restaurants are not going to improve. What's improving? The reason money's going into tech is because the Fed's putting money into the market and there's nowhere to go but tech. Even the Fed's not dumb enough to buy an airline. Warren Buffett was. He had the worst timing. Oh, here you go. Breaking news. Here's the market winner. Powell says Q2 GDP contraction is likely to be the biggest on record. That is the chairman of the Federal Reserve telling you this in his conference right now. Not wearing a mask either. The Fed will do what we can. The Fed will do what we can for as long as it takes. That's not good. They're only going to do what they can. They're not going to do what they can't. And that's not good because we need them to do whatever it takes, whether they can or can't do it. Wow. And the Dow's up, the market's up. So Powell's like saying all nice things, but the reality is this is a catastrophe. This is like the captain of the Titanic just telling you like, okay, we hit an iceberg, but we're going to do what we can to keep the ship afloat. Everybody goes, oh, good, thank goodness. Let's all go back to our roots and relax. We will do what we can to keep the ship floating. Wow, I cannot believe the market is up on this news. Well, that's the wrong reaction, I'll tell you that much. That's not going to be helpful at all. Oh my gosh. Oh. CLF, your view going into earnings and recovery. Yeah, look, Cleveland Cliffs, I like them, but again, the recovery is far away. What did we just say? Well, maybe I said that after you did that, but I don't know. When are we going to recover? How are we going to recover? We're like, first of all, we already forgot about the Congress thing. They didn't vote for any extension of stimulus or anything else like that. You know, I've always liked Cliffs because they're local steel. You know, local steel has a value. Steel is a bitch to ship and transport and so on and so forth. They have it in the U.S. They're a great provider, but we have no economy. You're betting here on Biden's infrastructure. He wants to spend a couple of trillion on infrastructure, and God bless him, we need it. And since we have determined that there is no limit whatsoever to how much money the government can spend, that myth the Republicans have had for so long where they say, oh, the government can't spend money, the government can't spend money. Bullshit. Obviously, the government can spend all the frickin' money it wants to forever and ever. Well, apparently they can. In reality, no, it's going to all blow up in our face. But again, as I've said many times, look at Japan. Japan has 300% debt to GDP. We're not there yet. We have a long way to go before we're Japan. So you know, I like CLF. It's a great company. I think a lot of them, but would I invest in it now? No, not really. I don't see it. Any thoughts on fuel cell? Fuel cell, we have in one of our portfolios, and the future is now. I think we have it. No, we have plug. Sorry, silly me. Fuel cell was one of the alternates that we had picked, and we thought we were going to invest in fuel cell. Even this one's up 50%. They look basic little plays. We just picked up, companies that we thought would do well in the future. So we got Total, we got SunPower, we have SunPower again because we like them so much and they got cheaper. We got Beyond, we got Arconic, which is that Alcoa spinoff. Square, Plug, and ALB makes I think lithium. Is that what the point is? I think it's because they make lithium. So you know, things that we think are going to be important in the future. That's what that portfolio is. Very simple. We barely touched it, and it's up 50% for the year. We didn't, you know, things went down, things went up. The thing that went down, when things went down, we bought more SunPower because we were like, oh, that's too cheap to ignore. And they're all a little bit profitable now, but they're great positions. So fuel cell was in with the group with Plug, and we decided of the ones that are like fuel cell and Plug, we decided that we liked Plug at the time, but we never got a chance to add to the position. We never got around to it. But I do like fuel cell. Harold says, let's grab a boat and sneak into New Zealand. Yeah, I don't think you have to do that. I had an article the other day. What was it? Countries you can buy a passport. Here you go. See, I just read this. So 12 countries you can buy a passport. So, oh, come on. I have an account. Oh, screw you, Forbes. I used to write for Forbes. All right, let's see. Places. All right, St. Kitts. Oh, St. Kitts. St. Kitts is nice. Let's see. How do we get to St. Kitts? 23% discount on citizenship. That's funny. It's like it's always for sale. You can always buy your way into it. So there's a 23. We're having a special on citizenship. 150,000 contribution to the Sustainable Growth Fund and a $200,000 real estate investment, and then you get passports for 4 people. That's not bad. I don't mind that. All right. St. Lucia. My grandparents love St. Lucia. My grandparents hit all the tax havens. My freaking grandpa, I wonder how much money he really had. Because he would always travel around to all these places. Every one of these tax havens, my grandfather would have banks in. I don't think we ever recovered it all, frankly. So let's see, COVID relief funds. The price to obtain citizenship was cut in half thanks to COVID relief funds. It'll cost $250,000 for an individual, $300,000 for. Oh, I'll go for the family, man. St. Lucia, you can get visa free or visa arrival in 140. That's not a bad passport. Antigua, also lovely. Oh, look at that place. Oh, that's Dominica. 100,000 to Antigua. Dominica should be really cheap. Yeah, just show up. One of the best countries for citizenship. Your spouse, dependent children, dependent parents, grandparents, your whole freaking family can become citizens. Just make a little investment. Okay, cool. I'm for that. Grenada, obviously we all know about Grenada. We had a little war there. They caused too much. I wouldn't go there. Portugal. Portugal's nice. Portugal is a very nice place, but they speak Portuguese, which annoys me. Or to get a Portuguese passport, I can't get my head around that language. It never makes sense to me. You know what it is? It's got too many influences of different languages, so I think I know what they're saying, but then I get confused. So for me, it's an annoying language. Portuguese art, culture, investing, blah, 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 buying. All right, so in other words, it's easy to become a Portuguese citizen. Turkey, I like Turkey, but I don't think I want to live there, but 250,000, you can be a citizen. Malta, another one my grandparents used to like. Whoa, look at that, 1.1 million for Malta. They don't really want you there. You better have it together. Cyprus, lovely place, 2.5 million. Wow. Austria, 3.5 million. Holy crap. New Zealand. Oh, here you go. You want to go to New Zealand. PayPal, Peter Field, doesn't come cheap. There are two different ways to get citizenship. 2 million over a 4-year period for their Vanuatu. Whoa, no way. How much? Oh, that's not bad. $180,000. That's fine. I don't know. I don't want to be there though. That's the problem. You gotta go somewhere you want to be. Look at that. That's pretty though. Look at that place. Oof. Wow. So what would be my top choice? Malta, too far. Turkey, no. Portugal, very nice place, but I don't really want to live there. Grenada, Dominica, I don't like it as much. Antigua, I think Antigua might be my choice here. Maybe maybe Kitts. I have to say, I think I might go for St. Kitts. You know, you want a place that's like not too far that you can jump on a plane from, but it's, you know, and again, it's still in virus mode. So I'm like, okay, that's nice. It's not very populated. But St. Kitts is good. St. Lucia is nice. I don't know about Antigua. Antigua's all right though. Interesting. Yeah, so I guess that's kind of place you can get away to. So there you go, guys. All right, we can run away and become island people. Oh my God, the Dow's flying up too. He's not worried about the dollar. Holy crap. The Dow is up 167 points. The Nasdaq's up 160 points too. So the Nasdaq's up 1.5%. So Powell is saying the Congress needs to be the ones that are putting more money in and doing stuff. All right. That's Harold's folks. We were talking about grabbing a boat and sneaking into New Zealand. So meanwhile, I don't know how updated this thing is, but the futures are flying. Look at that recovery. That's Powell speaking right there. Oh no, that's daily. Sorry, silly me. Look at that recovery. So We've been going up all day from the lows, and we're recovering most of it. Look at the S&P is already completely recovered from the last 2 days of falling. The NASDAQ is partly recovering. The Russell is already plowing ahead. I don't think it's going to last, but who cares? I mean, we'll see what happens. But, look, the bottom line is the Fed is saying, whoa, look at poor gasoline. The Fed is saying natural gas is flying. The Fed is saying they're going to continue to do whatever it takes. So Powell's, they're not putting it in writing, but Powell is pretty much saying he's going to do whatever he wants. Powell says he's not aware of a plan for the Fed to lend to bankrupt companies. That's interesting. They kind of do. I mean, when you lower the rates like this, you are lending to bankrupt companies. Or I guess he means not actually bankrupt. But yeah, Powell's making all the right noises and he's boosting the market up. And once again, we are saved. And then tomorrow's GDP report, though, is going to be a catastrophe. I don't understand why nobody seems to care, but that's what it is. So here's this. Were we in Twitter at some point? There it is. So GDP now. Here it is. So where's the latest estimate? So the Atlanta Fed is steady and the consensus is steady, 35% down. GDP 35% down. We get that report tomorrow morning. I think I might want to short the market here. I got to tell you. I think we're getting way overexcited about this Powell stuff. Who's the most shortable? S&P. There you go. If we get up by, I'd say if we go 3250, we could short that. And so that's my goal right now. Let's say we short at 3250, which we're spiking up to right now, in fact. Oh yeah, we're there. We're 3260. All right, so if we either cross below 3260 or hit, oh, here's 3260 up here. Let's go back to that. If we hit 3300, we're probably not going to. So back up around here, 3260. If we cross back below 3250, we absolutely want to short that line. Over here, obviously on the Russell, we want to short this 1500 line. So those are my two shorts, 1500 on the Russell, 3250, we're already over it. So if it crosses back under 3250 on the NASDAQ, but if we hit 1500 on the Russell, I want to short that anyway for the futures, and we'll see how that plays out. But this is just silly. There's no reason for this. And again, it goes back to fundamentals. What did Powell say? What did the Fed do? What's changing? It's just words. That's not policy. That's words. This is not real stuff. All right. So speaking of words, I'm running out of them. It's almost 3 o'clock. See if you guys have any more questions. We're going to wrap this thing up, and we will see what happens tomorrow with the GDP. Let's grab a boat and sneak to New Zealand, says Harold. That is the correct response. All right, so I'll see you guys next week in New Zealand. Take care, everybody. Thanks. Have a nice day.